Good morning and good afternoon, ladies and gentlemen, and welcome to part four, that's four, quattro of our series on business management and entrepreneurship. Now, we've already covered the introduction to this unit. We've already covered business information management. We looked at human resource management, and we looked at operations management. So there are two sections left. This section dealing with accounting, and of course the next section dealing with administration and administrative support. All right, so let's dive right into it. When an entrepreneur has to think like an accountant, okay, and think about the accounting needs of a business, there are several things they need to think about. Now, again, like I've said before, if you think these concepts are interesting, right, and you're like, hey, Mr. C, I'm kind of good with math and I like numbers and I like the idea of dealing with money, then maybe if entrepreneurship isn't your path, maybe you're thinking, I could pursue a career in accounting. And there is plenty of jobs out there dealing with accounting. And it's not just all boring math, I promise, because there's some really fun stuff that you run across and really interesting stuff when you really get to the nitty gritty of how a business operates. All right, so oversees or an accounting or the accounting department or the person thinking about accounting oversees all accounting needs. Okay, they also might oversee finance. Now, it depends on the structure of the business. You might see finance oversee accounting, okay, or you might see accounting overseeing finance. All right, each business is different. Okay, now, what does accounting do? Well, we're going to look at that definition in a minute. But accountants and the person in charge of accounting assures that all financial and accounting records are in order. So the money records, right? All taxes are paid. Ooh, that's important. We're going to talk about that in a few minutes, right? And monetary assets are in place where needed. Accounting can be defined as the following: the process of recording, measuring, interpreting, and communicating financial data. Oh boy, there's a lot to cover on this slide, so let's get into it, right? So, first things first, accounting and finance. What exactly is the difference? Well, for middle school terms, we'll think of it like this, all right? Accounting deals with the current value, okay? What is currently available? How much is it worth, right? What's currently in our accounts. And it's also dealing with things that have happened in the past, okay? In other words, this year, blah, blah, blah. The last 5 years, blah, 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 we've spent, okay? Those kind of things. Now, finance deals with essentially the future of money, okay? Not just lending, okay, but the future of money. If we put something into here as a business, what can we expect from it from the future, okay? So there you go, all right? Or if we start putting money into something, or if we want to purchase something in a few years, what can we expect it to be worth after a few years, okay? Those are the kind of things that finance oversees. So accounting is past to current. Finance is the future of money, okay? Now, that means that somebody's got to make sure that all the accounting records and financial records are in place. Where's the money at? All right, you got to figure that out because there are various regulations for the federal regulations, which means the overall United States, and state regulations and various business regulations that have to be followed. So you got to make sure that you're able to report those on notice, right? They got to make sure taxes are paid. Ladies and gentlemen, if you run a business and you don't pay your taxes, expect to be shut down. Plain and simple, all right? Or fined, all right? No bueno if you don't pay your taxes. In fact, individuals who don't pay their taxes will have to go through various forms of cases and all that kind of good stuff and legal stuff, and you don't want to do that. So you always got to make sure your taxes are paid. Now, I'm not just talking about paying sales tax when you purchase something. I'm talking about when you start working in the long term, right? Either the employer pays a portion of your taxes on your behalf, or if you're not working for an employer and you're contracting out your labor, or if you're the owner of the business, you're making sure that taxes are set aside, right, to pay Uncle Sam when it comes time. You got to pay those taxes, okay? Monetary assets. That means anything of value is placed where needed, okay, and valued where needed, all right? And then we just define that. Now, the definition here is really important because we already talked about recording briefly. You make sure the records are in place. Measuring. What does all the information mean? How do we measure it? What is the value of something? What are the percentages? What are the ratios of money? So on and so forth. And then you got to communicate that data in some way, form or fashion. If you're in the accounting department, are you counting that to the COO or the CFO, the Chief Operations Officer, or the Chief Financial Officer, right? Or the Chief Accounting Officer? Depends on the business, right? Who are you reporting that information to, or the owner? If you're the owner yourself, right? How are you accounting for or communicating those documents and those records? Are they being stored? How do you know what's going on? Is there software for that? Do you document every transaction? How do you balance the tills at the end, the money tills, right? The cash, and what credit card transactions have happened, so on and so forth. Yeah, there's a lot that goes on for a business. All right, so as far as vocabulary terms, right, there's a couple things that accountants need to know. This is just basic scratching the surface here, okay? Payables, okay? There's payables and receivables. In fact, some businesses have an accounts payable, accounts receivable department. Some, they're two different departments. Here's accounts receivables, right? Here's accounts payables. What is the difference? Well, you can look there and read, all right? But let me go into a definition as you're reading, okay? Payables. If Mr. C owes money for something, like I pay a monthly payment on my truck, okay? If I owe money for that, I have a payable. It means I get sent the bill. Okay, I need to pay it. That means the business has a payable. Mr. C has a payable. Okay, now a receivable, on the other hand, is the exact opposite. I'm waiting to receive money. It means the company is owing me something. So if I provide a service and I go film somebody and they say, hey, we're going to pay you $500 for filming us, whatever, right? Well, that's fine. Okay, that's great. All right. As soon as I make the agreement and I perform my service, I then have a receivable, right? I give them the bill and say, okay, here's what you owe me. You can either pay now or pay within a certain period of time. Okay, businesses to businesses will often extend a certain period of time. It's unlike when you go to the grocery store and you have to pay right away. All right, it's not like you can say, oh, put that on my account and I'll pay you back in 30 days. All right, if you're buying milk, not going to happen. All right, but businesses to businesses will often, have a layover for that. They call it a credit. Okay, now it has to be kept somewhere. All the documents and the records, right? You got a log and a register, right? Well, plain and simple, it's called a log or it's called a register, right? Now, a log is not that thing that fell in a forest that collects crickets, okay, and other furry and insect-like creatures, all right? So, no, it's a record of transactions. In other words, what happened, all right, where did it go, okay? Now, when we cover our unit on accounts payable, accounts receivable, and check writing, you're going to see that the register for your checking account has a credit and a debit. Okay, and what exactly does that mean? Well, credit only means, in accounting terms, credit only means puts money into, the right side of an accounting column. Okay, right side of an accounting column. Now, if you're thinking, well, Mr. C, why do they call it credit cards? We're going to talk about that at a later date in another unit, all right? Mr. C, why do they call them debit cards? We're going to talk about that at another time in another unit, okay? All right, so credit is the right side of an accounting column, usually puts money into the account, okay? You're crediting the account. You're putting money into the account, especially in banking terms and accounting terms and such, right? Debit means you are removing money, usually left side. Now, notice it says usually removing money. There are times where it won't be removing money, but whatever, right? That's like something I'm not going to explain here. That's more or less for college level accounting, okay? But usually left side. So credit, right side. This is my right, by the way. I know that's your left, but it's my right, okay? And then debit, left side of the accounting column, all right? That's the important thing to know. All righty, here we go. An asset. We already talked about this during our class introduction, right? But an asset is property owned by a person or a company. It holds specific value, okay? So think about the entrepreneur that works as a mechanic, right? All of his tools that he uses are assets, okay? If he is a traveling mechanic, okay, the car or the truck that he drives, right, is an asset, okay? In a business, everything can be considered an asset for the business. Everything from the building to the desks, the chairs, if you're a restaurant, the grills and the ovens, the refrigeration, so on and so forth, are all considered assets, all right? Now, value or property holds its value for a specific time. But how do you value the difference between, say, and long-term value between a pen and a vehicle? Or some Post-it notes, okay, and a building, all right? They each get classified differently, okay? They all have value, but they all get classified differently, right? Now, this might only have a value of $1 or a penny or what have you, but that's fine, all right? So here we go. Cash asset. Accountants and businesses need to know this, all right? Cash asset is something that can be converted to cash and sold in less than 30 days. No, hang on. Let me back up here, right? When you are valuing something, okay, you take consideration how long it holds its value for. So just in case, and this comes from the banking world, right? Just in case the business fails or the business collapses, how are the people that are owed money going to get their money back, especially for loans and so on and so forth? Or if the business owner has everything paid for and he decides, you know what, I'm going to get rid of the business. It's time for me to retire. I'm either going to sell it or I'm going to just sell all the stuff that I have in coordination with the business, okay? How is that entrepreneur going to value what he has? How do they know what they're going to make, right? Well, they have to value it via different value and asset specifications, asset classifications, okay? So here we go. A cash asset, all right, is cash, okay, because cash can be used, right? It holds its value. You want to get rid of cash as soon as you can as far as holding its value because of inflation. We'll talk about inflation on another date, okay? Things such as desks and chairs and things that you want to get rid of as soon as you can because they're going to decrease in value quickly, all right? Pens, right? This new box of pencils that I have here, where is it at? There it is, all right? This, well, has one use, right? But this new box of pencils, right? If all were in here, right? I might have paid $2.50 at Office Depot, right? But now that it's been sitting in my desk for a certain time, it ain't worth $2.50, okay? I might be able to sell it for $1. Or somebody might say, you know, it's not worth $1, but I'll give you 50 cents for it, okay? Well, that's fine, okay? Chairs, desks, and other office, what they call staples, like folders, filing cabinets, things like that, go in the cash asset territory, all right? Hand tools, okay? Mechanics hand tools would also be there, okay? Now, you also have a current asset. A current asset is a short-term asset that can be converted to cash or sold in less than a year. So you need to sell it in less than a year to hold its value, but you don't need to get rid of it quickly, okay? You don't need to get rid of it in that 30-day time frame, okay? Those are going to be things like automobiles, trucks, large equipment like farming equipment, so on and so forth, okay? Maybe if the mechanics place has a lift, okay, that would be a current asset, okay? Things such as that, all right? Servers, big computer system, not individual computers because those would go under cash asset, okay? And well, maybe computers, depends on how old they are, that kind of thing, right? And then finally, a fixed asset, all right? Doesn't mean it's fixed to the ground and it can't move. What a fixed asset means, it's land, it's property, it's buildings, right? They hold their value, okay? So in fact, land will actually increase in value over time in most cases, okay? So it doesn't have to be sold right away in the event that the owner decides to sell it, or if the business fails and the bank decides to come and try to liquidate assets to get the money, okay? So property owned by a person or a company holds a specific value. Really important for accountants to know. Alrighty. This is more advanced stuff. I'm not going to quiz you on this, okay? But this is college level stuff right here, all right? So real quick, if a business owes money, okay, they have a liability. If they owe somebody, they have a liability, okay? In other words, if the business has a payable, it's a liability. Now, liabilities may either be that quick payable or it might be long-term payables like loans, or if somebody lent them money for something and they're paying it back, okay? They have a liability. Equity is the value of property beyond what is owed. Okay, value of property beyond what is owed. So let's just say that a business operates and they have their own business, their own parking lot, and the real estate people in the state says, you know what, this property is worth $1 million, okay? Now, if they've already paid $500,000 for that $1 million property, okay, they are $500,000 on the positive side of equity. That's a good thing, right? Now, if the value of that property is, say, $1 million, and they paid $1.2 million for it, and they still owe $1.2 million, right? That means they are in a bad situation. That means they haven't met that equity yet, okay? So equity is the value of property beyond what is owed. Now, certain businesses and certain entrepreneurs might have investors, okay? So investors will put money into the company, right, in exchange for a share of profits or a share of the company in the event that they're sold, and they basically claim ownership, okay? Now, stockholder equity is the value of a business divided amongst its owners, so there might be multiple owners or just one, all right? An entrepreneur might say, hey, I'm running the business, but I need some help starting the business. I need some business partners to come in. They might be active business partners or inactive business partners, okay? And anytime that something happens to the company or they grow or they pay bonuses or what have you, all the owners get a share of that. Okay, so that's called stockholder equity. And then, of course, a balance sheet. In the accounting world, a balance sheet is the snapshot of financial health of a business or the money health of a business, right? Now, again, this is college level stuff. I don't expect you all to know this in middle school, but I'm just going over it anyways, right? So I want you to understand here that there's an important basic equation that goes into account for seeing how healthy a business is, right? And on the balance sheet or that snapshot, you could put some numbers together, all right? The basic health of a business states that assets, okay, the property, must always equal, okay, or be equal to what is owed or the liabilities and how much people have invested, okay? That's college level, entry level college accounting, okay? There you go. All right, so what does it take to be in the accounting department, okay? And what does it take to work in the field of accounting? If you're not thinking, okay, I don't want to be an entrepreneur because that's just way too much. The idea of running my own business just stresses me out, Mr. C. All right, well, that's fine, okay? Well, what you can do is you can look at a job in the accounting fields, and you can kind of see here our pathway, all right? So the pathway says here that, let's see here, if you want to work in accounting, you can work with just a high school level diploma or a graduate equivalent diploma, okay? You could be in billing and posting, so on and so forth. There's going to be entry level accounting jobs. Now, you might have to do that as an entrepreneur, or somebody in the business might be hired to say, okay, we're hired you and you're a secretary, but I also want you to do this. Well, that's fine, okay? Now, if you have some additional experience or additional certifications, right? You can look at bookkeeping, accounting, auditing, payroll, timekeeping clerks, so on and so forth, okay? And, of course, each business is different. Some businesses say, look, if you're working time and payroll, you need to have a college-level degree. Well, that's fine. Each business is different. Some businesses say, hey, I want you to be our accountant, but you don't need a diploma as long as you have or a college-level diploma or a degree, as long as you just have the right experience. Again, each business is different. There is no consistent there, okay? So, but the basic rule of thumb is accountants and auditors with a bachelor's degree, and then finance managers with a master's degree or higher. That means doctorate's degree, okay? Business finance. If you want to work in business finance without having a high school level diploma or some basic technical certifications, yeah, you're going to need at least that tech college or associate's degree, okay? Then you're going to look at that college degree with like being a budget estimator, cost estimator, financial analyst, and then financial managers and purchasing managers. You can look this up on your own. You can Google these terms. You can Google what they do, okay? Google how much they make and see if that career sounds interesting to you, all right? Not that just what you make is important, but you get the idea, okay? All right, so securities and investments. This is a really cool area, okay? This is where you're actually dealing with the futures of money, okay? Securities and investments. That's like working for mutual funds, stocks, so on and so forth. So if you're interested in that side of the business world, right? And it's always good that when you start making money as a business, you start investing, okay? You could work in as a tax preparer, right? Preparing taxes, all right? Liberty Mutual is known for, or got their start by preparing taxes and offering insurances and what have you. Let's see, the other Liberty and Hewitt and Jackson Hewitt, that's what they are, right? All those guys got started by helping people with their taxes, okay? So tax preparers, that's a good job to be in, okay? And of course, obviously, only certain times of the year that you need to work in taxes, especially after the beginning of the new year as businesses start preparing for what's coming around the corner on tax day, okay, which is April 15th. All right, so let's see, 1 to 3 years experience for compliance, energy brokers, investment fund managers, those kinds of things. Now, bachelor's degree, then you're going to be working in risk management, various securities and commodities, controlling hedge funds, and financial advisors. Now, if you're thinking, Mr. C, does that mean you don't have to have a master's degree here? Look, it doesn't look like right there. I'm sorry, I can't see it. There it is, right over there, this top blue one right there, right? Does that mean you don't have to have an advanced degree or a master's degree and you can't work in securities and commodities if you have a master's degree? No, you can. Each job is different, all right? All right, let's see. Ooh, that gets us to the end here, all right? So you got 3 simple questions, all right? But hopefully you have a good overview of the world of accounting. All right, if you have any questions, make sure you let Mr. C know. Take care of activity number 4. And then our next unit, our next section, all right, the next section. One last section, it's going to be a shorter section, will be on administration and administrative support, okay? And this is where things kind of take a little turn from entrepreneurship, but we'll talk about it. All right.